All right, let's go ahead and get started. I want to welcome everyone today to the Dynamic Trend webinar presentation. My name is Stephen Brumbelow. I'm the product manager here at Dynamic Trend. And today we're going to be covering some of the features of the Dynamic Trend platform. The first two features we're going to take a look at with some examples are the options volume map and the Elliott wave turning point. Those are the two features that we're going to kind of focus on here in the first half of today's presentation. And then we're going to go into, we're going to continue our series of diving deep into some of the individual features of the Dynamic Trend platform. And today we're going to focus on the matrix scanner and how we can use the matrix scanner not only to find specific types of setups, but also Elliott wave turning point setups, option volume map setups, things we can use for identifying options opportunities, and then earnings. We have a new feature that's going to be coming out here soon with earnings, and so I'm going to be able to show that to you today. Anytime throughout today's presentation, if you guys have any questions, please feel free to let me know. I'll be try to answer those questions in real time. If not, we'll catch them all at the end and get them all answered for you. And then we'll just go from there. So I'm going to go ahead and start out. Hopefully you guys can hear me. And just to let you know, this webinar is being recorded. I should have this up tomorrow sometime mid-afternoon so you can see that. And of course, anytime we have webinars that are recorded, you can always go to the Dynamic Trend website under support. There's a webinar section. This is pretty much where you signed up for your webinar. And if you scroll down towards the bottom, you'll see all the archived webinars that you can view. We're going to start putting down some descriptions of each one of these so you know which ones you can jump to. But tomorrow we'll have today's webinar listed here with that content in there. So always check back there to see what our archives are. How many archives we have up, and to see if there's any ones that you might have accidentally missed. So that's on our website. It's always there. And again, if you want to register for another webinar, you can also do that directly from that website. Okay, let's go ahead and just kind of jump in here. If you guys don't have any questions, hopefully you can hear me. Let's start talking about the first topic, which is the options volume map. The options volume map is a study that we created specifically to combat the confusion that some people get from looking at options chains. This is what pretty much a standard option chain looks like. This is the option chain inside of the Dynamic Trend platform. And as you can see, it of course holds the expirations, all the different strikes for each expiration. Our option chain allows you to select multiple. Let's find one that actually has a little bit more expirations, but we cover the weeklies, the monthlies, so whatever you select will be on the screen. Now, the nice thing about the option chain is it gives us not only the bids and asks and the last prices, but it does do in real time the open interest, the implied volatilities, and all of the Greeks. All right, but as you're looking at this is just a lot of information. These are a lot of numbers, okay? And if you really need to drill down for specific things that are important to you, like for instance, increases or decreases in volume or open interest, you kind of have to look in certain columns and you have to increase the amount of strikes to get kind of more information. And it just becomes very cumbersome to see where the increase or decrease in this particular volume for any expiration is. So what we did is we created a study that we actually put on a chart that gives you that information. So for instance, let's go to Apple because that's what we're looking at. All right, so here's an Apple chart. I'm going to go ahead and right click and go to add study, and we have the options volume map study that we put on here. And there's lots of different settings here, so you can tailor this to see certain kinds of weeklies or monthlies, but we won't go into those settings. But there it is. There's the options volume map. So you can see each one of these blocks that I'm showing you represents a specific representation of an expiration. And it could be a monthly or a weekly going out into the future. And each one of these lines, these horizontal lines going through these, represents a strike price. So that lines up with the strike price on the chart. So you can clearly see, based on what we're looking at here, where the volume is, and this is set to volume right now and not open interest, where the volume on the call side is compared on the volume on the put side at each individual strike. So instead of looking at that confusing option chain to kind of find all this information, we're graphically showing you that on the screen. Blue, of course, is the calls volume, and red, of course, is the put volume. Now, another thing we do with this tool is that we give you a small little block under each expiration here that describes the last 5 days of put call total. So you can see again in the last 5 days where the call volume was and the put volume was in total for all of the calls and all of the puts at that expiration. Then we take it another step further, and what you'll see here is underneath this call section at the very bottom, we total that up for you. And then on the put side, again in red, we total that up for you. And what that does is it gives us an overall view for this expiration where the put and call volume totals are. So you can see if there is an imbalance or a bias to one side or the other when you're making a trading decision. Now, what we found in our research is that a call imbalance or a put imbalance of 1.6 or greater gives us an indication that there is a potential, if you're, say, for instance, moving in a retracement, that retracement might be completed and you might see a resumption of that particular trend. And what I mean by that is that, let's say, for instance, the market's moving up and we see a retracement in the marketplace. Well, during this retracement, you usually see a lot of sell-offs, a lot of put action that's happening here, right? That volume might be increasing during that retracement on the put side. But as soon as you get your first indication that we have some calls overtaking the puts in volume, then that could be a potential indication that you would see a change in trend and a potential indication to move into that particular trade. So once we see during that scenario our ratio, which we display on the screen here for you, that's this right here. Once we see that ratio go above a 1.6, that gives us an indication that there's now an imbalance on one side that has a lot of strength, and that could be an indication that we're seeing that now, that change in that retracement with that original trend continuing and extending on higher, hopefully. So that's essentially how we use this particular tool. Now, it can be also used as a tool to identify what you want to do when you're starting to do an earnings play. So a few days before earnings are coming out, or the day before earnings coming out, you can actually take a look and see where are people buying calls or puts, or if they're buying more calls or more puts, and determine, well, instead of just doing a straight straddle, there's a lot of put buying or put buying here. So maybe this is an indication that I should just set my bias to the put side and maybe go in that direction for that earnings play. If things are equal, maybe a straddle or strangle might be the way to go. But if things are really overloaded on one side or the other, then that could help you in making a better decision and maximizing your gains. All right, so let's take a look at a couple of different examples. One of the examples I was looking at earlier is an MRO, and this is kind of a historical view of this, and I want to show you kind of how this process works out with this. As you can see here, we have a couple of different lows that have come into place here. Okay, and the question is what could this options volume map done to have helped me determine where that low is, and could I have gotten into this particular trade? Now, most of the stuff in our software, or most of our tools in our software, not only tell you what's going on in real time, what's happening right now, but we also give you the ability to look at stuff in the past so that you can do analysis, what if scenarios. And so what I can do with this options volume map is I can actually click on its anchor bar, and right now the anchor bar is anchored on the last bar. I can click on that anchor bar and I can draw it back to the past. And it will actually show me the historical volume for this particular stock based on the expirations that were happening at this particular point in time. All right. And as you can see here, where I'm at on this particular day, at that particular low, when that low was in place, we had an imbalance to the call side at a 1.7. All right, anything above the 1.6 we really think is an indication that we could potentially take this trade. Now, when we say it's the 1.7, this could be the, a change in that trend. We need a qualifier for this, okay? When we have a bar that's put into place, okay, let's say we're just moving here down into a retracement low like you're seeing now, and then all of a sudden we have one bar where now all of a sudden we've got some call volume coming into play. Now, is that the indication that we just dive right into this because we went from the put side to the call side? What we need is a qualifier, and the qualifier is that we still have that call pressure and the high of that bar gets taken out. And so that gives us an indication that that previous day's where the call pressure jumped in, where we can then start looking at identifying a trade and use that as an entry, or start using entry techniques to get into this particular position, assuming it's still continuing to move in that direction. So that helps us with that qualifier, all right? And so, for instance, here in this example, right, we have this particular low, and then we have this particular low that came into place. So we can come in here to this particular low and see, well, wait a minute, I don't have any buying pressure at this point in time. Right now, it's still in a selling pressure. So we can just keep moving this to the next bar, and now you can see it jump to 7.8. Now, again, it is an indication that there is a lot of call buying that's happening here, and we can visually see that here, right? There's a lot of call buying at that particular strike, okay? But we still need that bar to be taken out. Now, the next day, again, the highest high is lower, but we still have a lot of call pressure. So again, we can continue to follow that. And again, as long as that high is taken out, we can then potentially take that trade. And of course, the next day, there was even more call pressure that went into play. And of course, hindsight is always 20/20. We see exactly what happened in this scenario. And so that's how we can use the option volume map to identify when the market is in a retracement, lots of put pressure happening. As soon as we identify the first area where we have now a 1.6 or greater of call in this upward example, we can then qualify that the next day to make sure no new lows are being put into place, and then of course take the trade accordingly. And how you manage getting in or out of that trade is completely up to you. But this gives us that early identification. Now, how do you do that with this? Well, I don't know. We do have a historical view of this, right? I can go back to any day in time, but are we just going to sit there and write numbers down and hope for the best? That's exactly what the options volume map is used for. So you can quickly identify these tradable opportunities and get in the right direction at the right time as early as possible. And we also have another tool that I want to show you. Let's bring our options volume map back here to this day. Right, that was that first indication that we have a buying pressure here. We have another tool in here called the options replay. All right, I can actually come in here and say add study, and we're going to say options replay. And this is just so that you can do what if scenarios in the past, so that you can be ready for what's going to happen, obviously in real time. And the options replay, essentially what it does is it allows me to go back in time or existing and set up a spread trade exactly the way it would have been at that point in time, with the correct strike prices and the correct expirations at that point in time. And so it defaults to a long straddle, but let's just say if we were to buy a long call, and in our program, we pre-build these spreads for you. You don't have to know what a long iron condor is. We pre-build these spreads for you. But long call, pretty easy one. We're going to set this to a long call. All right, and that's going to go ahead and give us this study here at the bottom. And just like the options volume map, I can click on it and drag it to that point in time and say, if I were to buy a long call at that point in time, what would my profit and loss be? All right, and so we'll go ahead and stretch this out. Oops, my mouse is not cooperating with me today. And so as you can see here, if we were able to take this trade, this is some of the initial profit that we could have had with this particular trade setup. Let me reset my chart. There we go. Or if we would have jumped into this particular trade that we looked at and moved our options volume map over here, or options replay, and this is what our long call would have looked like for that particular setup. And then, of course, this particular low here, and move the options replay here, and that's what the setup would have been. And you can hover your mouse over this, and it'll tell you exactly what it would have purchased. It would have been an at-the-money front month long call. At that point, it was a May 18th, $118 call for this particular symbol. All right, so that's the MRO. I want to take a look at an earnings play, and this is actually happening now. This is as of today, RY. This is how we can look at this and judge. You know, like I had said before, when we're looking at an earnings play, a lot of times we just go ahead and do either a straddle or a strangle, right? You know, 10 on one side, 10 on the other side, and what happens tomorrow, we decide what to do with. As far as staying in that, and hope we get a certain percentage above or below what the current price is, a spike, right? That's exactly what the earnings play is. But what if you knew beforehand that you had a large increase on one side or the other? You understood what the bias was going into this trade, not just one day, but several days. You could go back, obviously, as many days as you want here with the options volume map to determine how people are identifying this particular stock and what they want to do. And so in this example here in RY, we can clearly see that based on our imbalance, we're at a 27.5. That is a large call side balance for this. Now in our program, we have the ability to add a study called earnings, right? It's not a magic study, it just actually tells you when the earnings are going to be. Okay, and you can hover over the earnings here at the bottom. These are the earnings that happened in the past. And of course, we have earnings going out into the future when they're going to be reported. But right now, I have earnings as of tomorrow, period ending 4:30, estimated earnings per share, time of day, and it's going to be before the open. It looks like we're going to have that particular earnings. But right now, if I'm making a decision on what I want to do with this particular play, I can potentially decide to be a little bit more biased on the buy side of the calls, because obviously this one has a very big move moving in the direction on the call side. Now, of course, it's no guarantee or anything, but it gives me an indication leading up to this particular stock where that call or put bias is for this particular play. So that's how we can use this for it. And I'll show you how we can actually search for earnings in our matrix scanner today. And when we go over the matrix tools, you can, be ready for any kind of earnings that might be coming up in the next several days or any specific day, but I'll show you how to do that. So where I have a question here about looking at a specific symbol, and so let's look at BIDU. Okay, so here's BIDU right now, and as you can see, we don't have any earnings that are happening here, but in the last couple of days in BIDU, right, we have a downward trend in the market. Okay, so at this point, you could consider this kind of a really deep retracement, but a lot of downward pressure happening in the marketplace. And we went from a call or a put imbalance of 1.4. It did move up to 1.4 yesterday, and then of course today we're at 1.8. So this is an indication that there might be, remember what I said, right? Here's your impulse move, there's your retracement. Okay, to identify the retracement, we're going to need to see an increase of 1.6 on the call side in this downward pressure. And then, of course, the next day, we're going to need to see that high taken out with, of course, increase in call volume of 1.6 or greater for us to indicate that this particular trend is completed. And the expectation is that we're going to see it move in the buying direction. Okay, so I'll just draw this out here. Impulse move, retracement, and then based on the information that we have right now, we could see a continuation of that original impulse trend, and hopefully have get into this as early as possible. But today on BIDU, as you can see, we have 8,370 on the volume side, total volume side for the calls, and 4,555 on the puts side. So as long as this particular bar here, we can still see an increase in call volume and we can take out that particular high, that could be an indication that we've qualified this and we could see a change in trend. And of course, that point in time, you can use whatever triggering technique you use as far as getting into the market, or if you're already managing a pre-existing trade, utilize that information to manage the trade itself, depending on whether you're long or short. So that's for BIDU. The next tool that I want to take a look at is the Elliott Wave turning points. And so let's go ahead and close this chart out. And the Elliott Wave turning points is a tool that we've designed, and we've been doing research on Elliott Wave going back to the mid-80s, the 1980s. So we've been doing a lot of work with Elliott Wave turning points. The problem with Elliott Wave turning points is that they can be very, very complex to understand. As far as the 5-wave sequence goes and the corrections and the ABC moves and all those kinds of things, it's just not really simple. And there's a lot of different ways of calculating it, as far as how every new bar comes in, you recalculate the whole Elliott wave, or you fit it to a specific pattern. There's lots of different ways to do it. So you could spend a lot of time educating yourself, or you can use the Elliott Wave turning points that we've created, which utilize that technology, utilizes other studies and indicators to find points in the marketplace where we believe there are turning points. So, for instance, if the market's moving down, we're trying to identify a turning point up. If the market's moving up, we're trying to find a turning point that moves down. Okay, and we label these turning points based on the length that we think that trade should last, how long that trade should last. Okay, so you can identify the time frame that you want to trade in, and the Elliott Wave turning points works for every time frame. You can identify the type of time frame that you want to trade in and how long you want to be in that trade, and then those are the Elliott Wave turning points that you can use. So the Elliott Wave turning points are pretty simple. Let me put a symbol here, NTNX, and it's a very simple tool. Add study, and we're going to go to Elliott Wave turning points at the very top. Okay, we have several different types of turning points. Again, like I said, length of trade. So we have the dynamic one, which is a very short-term trade, all the way up to a long-term, which is a much longer-term trade. So depending on the type of trader you are, most people stay in and around the yellow and the blue, right? The short term to medium term. But again, whatever trading style you have, you can use those. I'm going to put them all on the screen for you. But as you can see here, this is what we're looking at here on it. And it gives you the Elliott Wave turning points. It gives you target levels. And it also gives you entry levels. Okay, where we think that particular trade should be entered. As you can see here, this is our entry level for this particular trade, this blue trade here. Okay, and then we have a target area. Based on that turning point, based on the algorithm, this is where we think that you should now start qualify the trade, and you should start looking about getting into the trade. And then this particular area right here, this upper blue area, gives us an indication of when we think that trade is over, not only based on time, but also on price. And then, of course, at the bottom here, we have these dotted lines. And these dotted lines here at the very bottom here is, everyone wants to call these stops when I talk to them. It's not necessarily a stop. It's a canceled trade. If we cannot get into this trigger area and the market just kind of moseys off and moseys off, if it hits that area, the trade is canceled. Elliott wave turning points don't leave the screen. Once they're in place, they're set in stone and they're going to be there. So if this particular trade comes down and violates the dotted line, that just means that the trade is negated. Move on to the next opportunity. Now, one last thing that you'll probably see on here are these little dotted lines, or these kind of circular line or dots. Okay, and we call these basically, it's kind of like a trailing stop. It's a trailing stop for the trade setup. One of the things that we found in our research is that the expectation is that we're going to get into this target area. But what sometimes happens, didn't happen here specifically, but what sometimes happens is that not only does it reach this area, but it takes off and goes even higher. So what we do is we put, as soon as we get into this target area, we start putting these little dots into place to let you know that as long as we can stay above in this buying opportunity, these dots, then we can continue to stay in this trade. So if it trails off and goes up another 20 points, 30 points, then that's fantastic. It'll help keep you in that trade a little bit longer, as opposed to just getting out right as soon as it breaks into that particular target area. And so these are amazing. These are great points. They're great opportunities to find in the marketplace. They work off of the Elliott wave principle for retracements and continuation trades in the marketplace. So whether you're looking for either one of those two things, and you can also use the options volume map to help you identify these particular trades and how, what you should be doing. Does Elliott wave turning points and the option volume bias, are they going in that same direction? And I'll show you how to use that here in a second. What I want to show you is another tool that we use to help qualify these particular trades. And we're going to focus in on these last two trades here. Okay, these particular two trades here. All right, and we're going to put another study on here, which is called Tom's strength levels. Okay, and it's down here at the bottom. This is the Tom's strength levels. And what the Tom's strength levels do is it helps identify the strength in this market. It measures the strength in the market. And basically the rule of thumb is, it's pretty simple. We have three sections here. The first section is this section. This is the upward strength. The second section is down here towards the bottom. This is the downward strength. This is if you were looking for selling opportunities. The third section is the one that's kind of in the middle here. This is basically what we call the neutral area. This is basically where mathematically we can't identify strength in either direction. Okay? And so what we do is we tell you that if you're looking at an Elliott wave turning point, you need to be, and for this particular example, we have two buying opportunities. Okay? We have a short-term and a medium-term buying opportunity. As long as we're in that positive area, that gives us an indication that we have strength in the direction that we're trading. Okay, that's all we need to do. All we need to be is in that positive area, and that helps qualify those buying opportunities. Now, there's a lot of different ways we can use the Tom's strength levels, the TSLs. Okay, this is one of them. Qualifying buying or selling opportunities using the Elliott wave turning points in the direction of the trade. The next way we can help qualify or use the Tom's strength indicator is that what we found with our research is that if the TSL gets into level 4, which is, we kind of label that as a yellow color, okay, the fourth level here, the expectation is that once we get into that yellow level, that you usually will start to see a retracement in the marketplace. Okay, like you can see in this example here. We'll have to excuse that noise. We got a little bit of a thunderstorm happening right now. If I suddenly just stop, then that means that the internet went out or something here. So we got a little bit of weather coming in. So the expectation is that once we have that yellow in our TSL, the expectation after that is that there's going to be a retracement in the marketplace at that point in time. Now, that's great news for credit spread traders, right? Credit spread traders can potentially take opportunities when we get into that peak mode of that yellow TSL. But then what happens is you have the retracement. Once the retracement is completed, the Elliott wave turning points will then identify that opportunity. You can help qualify that opportunity to make sure that that retracement on the TSL did not go into negative or the neutral area. As long as it stays above that, you can then take that particular trade. And in this example here, this is where you could have taken the trade. And I just click, by the way, all I'm doing is clicking on the actual trades themselves. The last one will always show up for you. You don't have to click on that one, but any ones in the past, you can just left click on them and they'll show the target and the trigger levels. Okay, and so that's what would have happened in this particular trade setup. So as an options trader, you could have taken a credit trade here up until the point where you had an Elliott wave turning point buying situation, qualify that trade, and then once you're triggered into that particular trade, you can then follow along on that particular trade using the Elliott wave turning points, and of course those dots, which give us that trailing stop, so that, you know, hey, once you hit the target area, you can choose to get out of the position, out of some of the position, tighten up stops, or just use the trailing stop, the trailing dots at that point in time to stay in the position until those get taken out also. Now, I also told you before, we can also help qualify this particular trade as far as an entry goes using the options volume map, right? We're options traders, so we're gonna use that. Well, what we can do, and I'm gonna go ahead and put on the options volume map here. Okay, I'm just using the defaults. If I click here, you can see which bar jumped into and closed inside of that trigger point, right? This is the bar right here that did that. That's the bar that closed inside of our trigger point. So what I could do is I can come over to that particular bar historically to see, all right, if this is the point where the options or the Elliott wave turning points has now qualified this trade, it's triggered, I'm above the strength levels in the TSL, everything looks good here. Now let's see what the bias is on the buying and selling inside of the options. Well, if this was in real time, this wouldn't be an orange color, it'd be a blue color, but here we are. We're at a 10.1 bias to the call side. We're thinking about buying this, so that gives us that much more credit that this particular retracement is over. The Elliott wave turning point is qualified with the strength levels, and the options volume map during the triggering technique gives us an indication that other people are starting to buy also into this particular market, and then you can take that trade. So this is kind of how we can combine all of these different studies together to help not only identify opportunities, but also to qualify those opportunities before we get into a trade. If I'm looking at an Elliott wave turning point, okay, and I'm in a neutral area on the TSL, and I'm looking at that trigger point, and I've got put pressure moving into this particular market, that's an indication that I don't want to take this buying opportunity, right? But you don't have that information unless you have, obviously, the dynamic trend program, which gives us all of that information. So we're trying to get you into the best possible opportunities so that you can maximize your gains as much as possible. Minimize your loss, maximize your gain. So the question here is, how do we find all this stuff? And that's what's going to lead me into what I want to talk about for the rest of today's presentation, which is how we use the matrix tool, the scanning tool, to find all of these different opportunities, or any other type of opportunities for that matter. So this is kind of like the educational part of today's presentation. We're going to look at the matrix to see how we can do that. If we have a little time left over, which I don't know if we're going to, I might even talk to you a little bit about Strategy Builder. If we don't get Strategy Builder in today, we'll definitely get that in next week, and we'll talk about how once we find opportunities, we can use the Strategy Builder with our projection to give us a list of strategies we might want to take and to look at their return on investments and at expiration profits. And so I'll show you that either hopefully today, but if not, we'll hit that up definitely next week. All right, so let's look at our matrix tool. Matrix tool, extremely powerful tool. It is nothing short of, or you can just basically describe it as a real-time scanner. It is a real-time stock and option scanner. I will clarify this. We do not cover all stocks. We're an options-based company, so when it comes to stocks, we cover all the optionable stocks. And that's roughly around 2,900 to 3,100, depending on what's happening in the market. Some come in and fall off all the time. So it's roughly around there. And we also do remove several hundred optionable stocks that just have no volume whatsoever. Okay. You don't want to get in it. We don't want you to put you in a situation where we find this great trade and you can get into it really quick, but it takes you like 2 weeks to get out of it. So some of the lower volume stuff we keep away from the scanner completely. But this is usually all higher end, higher volumed symbols, and roughly, like I said, around 2,900 to 3,100 symbols at any given time. So let's talk a little bit about this. It looks a little complicated at first, but it's actually pretty simple once you get used to it. At the very top, we have Scan 1 and Scan 2. They're both the same, but we just allow you to scan for 2 different filters at the same time if you want to. We'll just focus on scan number 1. First off, we allow you to scan either all stock symbols or all option symbols. You can actually come in here and say, show me all the options that have implied volatility greater than 50% that expire in the next 3 days that have an open interest greater than 100. Boom, it'll give you a list of all the options that meet that criteria. Or just show me underlying symbols that meet a specific criteria. Under our basic scans, we have top point gainers, point losers. These are all kind of standard type scans that you would see anywhere. We have breakout type scans here, so something that's generating a 2-month high today or a 2-month low. Most of these are breakout type scans. Unusual volume stocks, so if you have a stock that has unusually large underlying volume that's happening all of a sudden today and you want to be notified about it, we have it there. And then of course percent gainers and losers in the last week or month. Okay, so again, these are mostly what I would consider breakout trade type setups. We have momentum based scans. So if you're looking for stuff that's, hey, top point gainer since the open, breakout type things for what's happening right now. We have gappers and special strategy scans. If you're a candlestick trader, okay, we have a tool in our program. It's called Candle Patterns. It'll put all of the different candle patterns on the chart for you. But if you want to scan for specific daily or weekly candle patterns, you can actually do that in here inside the program, inside the matrix. Reversal signals. Technical scans, if you're looking at specific types of trading strategies. So for instance, if you're looking for a covered call candidate. Now, what does a covered call candidate mean? Well, geez, that means that the historical volatility for the stock is low, but the implied volatility for the options are high. Well, I mean, to scan 3,000 symbols manually to find that would probably take you a week, right? Or maybe even longer. We do that automatically for you. We're looking for low historical volatility for the underlying symbol, meaning that it doesn't trade all that much, not a lot of action, but the implied volatility for the options are very high. So that gives us an opportunity for a credit spread. And just by clicking here, boom, there's your list. It's a couple of weeks trimmed down to a half a second. So those are our technical scans. We also have our top option scan. So we're looking at the options for the underlying symbol. So top point option gainers, top volume options. So if you're looking for breakouts when it comes to the actual options themselves, it'll give you a list of stocks that meet that criteria. In our advanced option scans, we have all kinds of things. If you're looking for continuous implied volatility that's at a higher range or at a lower range, comparison between the implied volatility and the historical volatility, all kinds of different types of scans that you can use for that, increase or decreases in the last X amount of days. In our advanced scan, we have stocks with overpriced options or stocks with underpriced options. We have a study in the program that basically identifies when the options for the underlying symbol are considered to be more expensive or less expensive. Let me show you what that looks like here. We'll just do it for this one here too. Add study. It's called DT, underpriced, overpriced. It's an incredibly simple study, but it gives us an indication that when we're in this, I don't like these colors, this cyan color, green, might be green on your screen. If we're in the cyan color, that lets us know that we're in a overpriced mode. And if it's in the pinkish area, that lets us know that we have underpriced options. So you can focus on whether you want to be a buyer or a seller considerably for those options itself. If you want to be a credit spread trader, focus more on credit spreads, maybe look at more overpriced options. And again, we do this for any symbol. You know, Apple right now in general has underpriced options. So that, you know, if you're looking for buying opportunities in Apple, right now the options are considered to be on the lower end of that price scale. And you can scan for that, of course. Inside here, under Advanced Scan, just say underpriced options. There you go. There's a list of symbols that have underpriced options. And of course, if you are a volatility skew trader, if you're looking for volatility smiles or frowns, we automatically will scan for those also. Most of those skew traders will have to type in one symbol at a time and start looking at those IVs to see where they're at, increase, decrease, depending on the expiration. We do that work for you automatically with the scan. Now, those are the basic scans that we scan for, but we also have a ton of different filters that you can use. So for instance here, this is, in the scan 2, by the way, they're all the same ones. You can just pick 2 of them if you want to. If you choose none, it'll only scan for the first one. Let's go to all stock symbols. The next section we have here are filters, and these are just underlying price filters and volume filters. Very simple. Min price, max price, minimum average volume. So if, let's say for instance, you really want high-end stocks, and you can set this to 1,000, which basically what that says is it's in K, and it's on a 20-day average, and it's just saying, show me stocks that trade a minimum of 1 million shares on average for the last 20 days. Higher end stocks. A min average true range, a max average true range. You can choose a specific exchange, sector or group. You can drill it down to filter to specific sectors or groups. Stocks, ETFs, or just ETFs themselves. And then we have this little button here. This is where everyone kind of gets a little confused. This is where they forget, is under our additional filters, we have a lot more that you can actually filter out for. For instance, the first tab that we're looking at, we can actually look for stock rotation strength and group rotation strength. And this deals with our group rotation tool, okay, which identifies when a stock is inside of a group that's strong or a sector that's strong or weak. And if you have our program, there's a group button here on the left, and if you click on that, we can actually say, well, right now, the financial sector is considered to be on the strong side for the last 10 days because it's blue, and the consumer financial services is extremely strong. So here are all the stocks that are in that financial services. So you can see strength and weakness, not only in the stock itself, but the group and sector. And so when we're using this particular tool, this matrix tool, I can say, only show me stocks that meet my criteria, my scan number 1, that have a medium trend strength that's a strong up. Right? If you're looking for a buying opportunity, you wouldn't want something that's trading inside of an industry group that's going down, right? There's, you know, the big players are all dumping money out of a specific group. You wouldn't want to be buying into it when that's happening, right? So this gives us an indication where we can further qualify that to say that that industry sector or group is also considered to be strong, or at least trading in that same direction. The next one is options filter. We're going to skip that for right now because we're just looking at the underlying, but I'll show you how we can do this, the options here in a second. Scan list. The scan list tab lets us use a custom scan list. Now we scan like I said, the roughly 3,000 optionable symbols, but if you want to say, hey, I only have 15 or 20 stocks that I follow, or 100 stocks that I follow, I don't want to, have all that kind of stuff happening in my list. I just want to focus on those 100 symbols. You can then put those symbols in there. You can either import the symbols or type them in or copy them right directly into this box, and it will just scan those particular symbols. And then the meat of the scanner, the most fun part, is the DT Elliott Wave turning points. This is where we can look for either all stocks or all stocks that are breaking above a 50-day moving average that have an Elliott Wave turning point with a direction up on a daily time frame, where the current bar has a medium-term trend, which is a 30 to 35 bar trade. So all we need to do at that point is click scan, and it'll automatically find those stocks. Now let's take a look here. For instance, we're going to go dynamic, right? These are quick trades, 3 to 5 bars. I'm going to tame this down here to 300,000 shares. So here's a list, and again, I just hit scan, instantaneously get the results back. Here's a list of all the stock symbols with a minimum price of $5, with a minimum average volume of 300,000 shares that have an Elliott Wave turning point. Let me make sure I didn't put my stock filter on. Oh, I did. I didn't want that on. That have an Elliott Wave turning point in an up direction on the current bar that's dynamic 3 to 5 bars. Okay. Then remember, what we do is we always qualify those particular trades with the Tom strength levels. So I can say that also has a Tom strength level that's above at least 1, right? We're in the buying mode, so we want it above 1. We don't want it below, and we certainly don't want it in the neutral zone. So as long as we're at 1 or above, this is what we're looking for. And so now when I scan, the list gets a little bit shorter, but these meet that particular criteria. The scanner takes this one step further. The scanner not only lets you look for Tom strength levels for the current time frame, but it also lets you to cross-reference a higher time frame. Do we have longer term strength? Okay, is the overall picture for this particular stock, the longer term picture, also have TSLs of 1 or greater? And I can check that. The next higher time frame from a daily is a 2-day chart. So we're just going to select that. And as long as it has a TSL above 1, I can click scan. And they do. I can even take this one even higher and take it as high as 3 and say, do we have super long-term strength with good strength on this lower time frame? All right, so we're at level 3. So it gives us a few symbols for that. Now what I can do, and this is just kind of a personal preference setup for you, is I'm going to go ahead and open up a chart. I'm going to go up to, I have a chart and a matrix open right now. I'm going to go up to window and I'm going to say tile vertically, which is just basically going to put my chart and my matrix side by side. I'm going to give my chart a little bit more room actually. And then what I'm going to do is I'm going to link these two features together, symbol-wise. So I'm going to click on group, and I'm going to change it to a group 1. And I'm going to change the chart also to group 1. So now anytime I click on a symbol inside my matrix, it will automatically change my chart. So I'm going to right click here and set my chart up with the Elliott Wave turning points. I'm going to set my chart up here. And we chose the dynamic, so I'm going to edit that study. And we're going to turn off everything but dynamic. Okay. And then we're going to add the TSL. Okay, and so here we go. Now, Just as a reminder for everyone who has the program already, if this is the way I want to set up my chart and always have my chart open up, I can always right click here and just say template, set as default. Once I have all the studies and indicators and colors and backgrounds and all that stuff the way I want it every time to show up, just go to right click, template, and then save as default. Now anytime I open up a new chart, it'll always have elliott wave turning points and the TSL on it. All right, so here we are. Here's EAT. EAT has a dynamic trade setup, right? Here is there's our trigger section, there's our target section, and we're going to help qualify this by looking at our TSL. Our TSL obviously is in that blue area right now. We already knew that because the scanner told us. And we know that higher time frame, right, the 2-day chart is also in that above 3 level, okay? How do we get a 2-day chart? We hit the drop down here. There is no 2-day chart. Well, remember with dynamic trend, you can put in any time frame you want, 3-minute, 5-minute, 30-minute. And if you want a 2-day chart, just type 2D, hit enter, and here's our 2D. And so as you can see, we're in that 3rd level now, right? That orange level. Here's 1, 2, and we're right there at the 3. So that gives us an indication that long-term trend is still in our direction, overall still in our direction, as we see here on the daily. And so you can go through all these different symbols, and you're going to have the same type of thing, where it is in a dynamic mode. This is a terrible chart. We're in a dynamic mode, and we have positive strength on our TSL. And we got all that information from the scanner. We didn't have to type through anything or do anything else, and all that information on the scanner. And of course, once we get into a scenario where it moves into our trigger point, now we can put the options volume map on. And because we're looking at a buying opportunity here, we want to see call pressure in the direction that we're at to help qualify that. It might not completely take you out of the trade, but if you have all of these things in play, that might give you that much more confidence to take that trade. All right, let's take a look at one last thing in our scanner. Okay, that's kind of how we can set this thing up, but I want you to show you one more thing what we can do in this scanner. I'm going to open a new one because I have filters on all over the place here, so we're just going to clear out our scanner and open a new one. And under Advanced Filters, the last tab is Earnings. And so this is kind of a new feature for us. This is actually not out yet. It's sort of out in a sense that you can actually look for earnings on a specific date range, or on a specific date, or today before the open, after the close, tomorrow. But we now give you the ability to choose specific dates. So show me earnings that are happening between one start date and an end date. So if you want to say, I only want to see all the earnings that are happening on June 18th through June 22nd. It will show you all the stock symbols that are having earnings in that particular week. Okay. Now, because this is partly a training video, remember, anytime you're just going to do simple earnings scans, make sure you set your symbols to all stock symbols. Those were just top point gainers. Adobe was a top point gainer and had earnings that week, but these are all the rest of the symbols that have earnings on that week. Of course, here's the earnings date for them, and you can see where that particular earnings is for those. So it's a very powerful tool, and not only can you choose earnings between a specific date, you can actually choose exclude. So saying, I want to exclude any symbols that have earnings on that particular date. So if you're looking for particular trade setups and you don't want to be bothered by earnings, I mean, how many times have you been in a scenario where a buy setup comes into place and then all of a sudden you get into the trade and everything looks good, and then you wake up one morning and this thing went down 10 points. You're like, what just happened? Oh, earnings came out. So if you want to take trades where you are not affected by earnings, you can say, hey, I'm doing an options trade that expires in 15 days. I don't want to take any trades that have earnings in the next 15 days that could potentially ruin that. No one wants corporate actions to be detrimental to their trading account in any way, shape, or form. So that's why we have this particular tool in here. And again, you can do all stocks if you're just looking for earnings, or if you're looking for a particular setup, you can include or exclude specific earnings for those dates. The very last thing that I want to get in before we close out today's session is also searching for specific options. If you wanted to search for an option that met a specific criteria for, say, certain symbols or for all of the symbols, what you could do is, and let me turn this off. Now I'm going to change this from all symbols to all option symbols. And now what it will let me do is it will say I can search for puts or calls, in the money, at the money, out of the money, or all of the above. And then I can say, with my advanced filters, only show me options where a price, it's between a certain price for the option, average volume, open interest, days to expiration, probabilities of in the money, implied volatilities. So you can come in here and say, for the underlying symbol, show me all the underlying stocks that have a Fibonacci ratio long trade setup, where the stock strength is strong up, and oops, got to set that to the second one. There we go. Where the call options, now this advanced option scan DT Fibonacci ratio long is basically looking for a retracement in the marketplace. It's not overly concerned about how deep the retracement is or based on the previous impulse of the market. It's just looking for a specific type of retracement. So we're looking for a potential buying opportunity. So in that case, we want to find calls, and let's just say we want calls that are, I don't know, anywhere between $1 and $5. We're not so worried about the average volume or open interest, but I want to make sure that you have a probability of being in the money is greater than 50%. And I want to kind of, for the most part, when you're buying a call, I want to have the low implied volatility here. So we'll just set this from 0 and we'll just say 40. All right, so I have those checked and we're going to click scan. And so now I have a list of symbols that are in a DT Fibonacci ratio long daily where the stock is in a strong group and the options for those particular symbols are priced between $1 and $5. That have a probability of being in the money greater than 50% and have an implied volatility of no more than 40%. That's how we can do that. That's how quickly we can. And of course, you can, if you have a trading account set up with us, whether it be through TradeStation or any of the other brokers we support, you can right-click and then populate the trade ticket and then take that particular trade. So that's essentially our matrix tool. Being able to find all those different opportunities, those different combos of opportunities, qualify them on the chart themselves, and then of course quickly take the trade. Now, if you want to get more information about dynamic trend or dynamic trend tools themselves, what I recommend is going to dynamictrend.com, and the very first thing to do would be to click the features button at the very top. There's drop downs here for the individual features, but if you just click on features, it will give you a dynamic trend overview trading platform video. This is a great video. If you're not sick of my voice today, you'll get a little bit more out of it in this video, but which goes over some of the major features in our software, or you can scroll down and watch videos for the other types of features. And of course, if you want more info, you can click on more info and it'll give you more info for that. So I definitely recommend doing that. If you don't have the software and you're thinking about subscribing, please feel free to click the subscribe button, and that will take you to the particular feeds and brokerages that we support. Feel free at that point in time to click subscribe now, fill out the form, and we can get you up and running with that particular product. If you have any questions, comments, or concerns, please give us an email. Send us an email at sales@dynamictrend.com, support@dynamictrend.com, or you can always click on the contact button on our website, which will give you all that information. So you can go right from there, and then we'll be able to answer any kind of questions that you have. If you guys want to see this video one more time, again, probably around 1 or 2-ish tomorrow, I'll have this video published. And again, you'll be able to go to support and webinars, and it will be here at the bottom. It will have today's date on it, and you can view that video from that point in time. I don't have any questions right now, so I want to thank everybody for stopping by and hopefully this was good information for you. I appreciate it. I hope everybody has a great trading week this week. And again, if you have any questions or comments or concerns, please feel free to give us an email, and we'll get those questions answered as quickly as possible. Thanks, and have a great week.